heave a sigh of relief because the governor didn't seem too concerned. And in fact, he expects inflation to peak out in the third quarter. Right now, he's saying core inflation is actually running at a fairly benign level. So, Devapam, if I could ask you for your first thoughts on what the fine print on inflation sounds to you like.
Thank you, Surbhi. So I think this was a policy which was greatly on expected lines. And given the conditions we are in, I think boring is beautiful right now. That's what the governor also delivered. My understanding of inflation is pretty much similar. I think this is a supply-driven inflation. The moment the West Asian conflicts ease, energy prices come down. In Mr. Trump's word, it might come down like a rock, it might fall like a rock. If that happens, then obviously a lot of the risk that we are seeing in the inflation numbers will go away just like that. So it's good to wait for that rather than take any precautionary measures right away. I think with the downward or the lower forecast for Q2 that the governor came up with, I think the forecast was reduced by 40 basis points compared to where RBI initially thought it would be. That would give them further headroom to maintain one more pause in the October policy as well. And all of these will certainly help create a ceiling to bond yields, particularly corporate bond yields, which have not yet come down after increasing post-conflict as much as how much the sovereign yields have come down. These pauses are going to certainly ensure that there is a ceiling and there is no runway, a significant spike all of a sudden, like how we saw in the US market when the Fed announced a pause. The Indian markets would be entirely different, and we are seeing that right now. Despite the pause, our bond markets and equity markets are rejoicing the fact, which was very different when the Fed announced the pause last month. So these are very positive announcements, and as I said, boring is beautiful right now.
Yeah, I think that really sums it up. I couldn't agree more. Devapam, that's a great line. Boring is indeed beautiful, and after the kind of year we've had, 2026, we are very happy with boring, I think, in the market and as market commentators as well. Let's bring in Sandeep into the conversation. Sandeep, hi. So, where does it leave us in terms of expectations of a rate hike? Most people said that it won't happen today. Maybe it happens 2 months down the line. Devapam says that maybe even the October rate hike, it's not looking a certainty now. What's your reading?
Well, I completely concur with what he's saying. I think for the last 6 months, people have been expecting a rate hike in next to next policy. And as every policy goes away, people will get, 4 months down the line. I believe it's the same right now. There's too much of uncertainty right now. With core inflation expected to be around 4.3% according to RBI. It's too early and too premature to talk about rate hikes. We are not expecting any rate hike in this calendar year. But having said that, everything is fluid. If the oil prices really spike up or El Nino really impacts, then of course there could be a rate hike. But where we are right now, we don't expect a rate hike, and it's probably too early. RBI had put 95 as oil for the last policy when they said inflation will be 5.1%. Nearly half the year is over, and I don't think average price of oil has been anywhere close to $95. And if you see that, then most probably the inflation will be a little lower than what RBI is projecting right now. And I would be very, very surprised if RBI were to hike the rates in the next policy, and probably not in this calendar year.
Okay, so that's interesting. Maybe no hikes this calendar year. Devapam, would you go as far as to expect the same? You said October no hike. But, is the rate hike completely off the table now then, at least this calendar year?
No, I was being humble. So I've been on record saying that the next rate hike would only be in February, when actual inflation pressures would be visible and all the noise that is around inflation that we are seeing today because of elevated fuel or derived fuel costs, they will subside. So the base case scenario is in the next 1 quarter, the West Asian conflict will subside significantly. Post that, we will see the actual inflation trend, which obviously would be higher than what it used to be, say, 9 months back in time. And that is the time when RBI will get good quality data to decide on a rate hike, and that would be somewhere around February, is what my take is.
Okay. By the way, we should show the market reaction as well. The rupee was at 94.99 before the policy. It's at 95.09, so not much of a change. We should bring up the 10-year yield as well. It'll come up in just a bit. I think there's a couple of basis points move that we've seen on the yield. Now, the equity market reaction is anyway too hard to gauge because of this whole closing auction business. The Bank Nifty is down 0.25%. But I wouldn't go on to say that that's a policy reaction. The Bank Nifty has its own issues to deal with because of this closing auction. That's the rupee. There you see. That's the 10-year yield at 6.77. So I think the yield has moved down a couple of notches. And if you see what's going on with the equity market, then that's where things are really confusing. So Sensex has been a cleaner barometer of the equity market sentiment than the Nifty in the last 2 days because of this whole auction session. Sensex is up 0.3%. Now Nifty Bank, very tough to understand how this is because again there was that big surge, 400 points at close. Now the Nifty Bank is down quite a bit. So Sensex is showcasing a thumbs up to the policy for what it's worth, at least for now. Hearing the gentleman on the panel, Lakshmi, I mean, this sounds like a dovish pause. Today actually I thought we'll get a hawkish pause. But what he has said and the commentary on inflation, would you agree? This is a dovish pause and the gentlemen don't expect any rate hikes this year. What about you?
Maybe, if the central banker has to indicate a future potential or indicate some sort of a rate action, you have to change the stance first. And in today's policy, the stance has not really changed. And intuitively, I mean, if you track all the data which we are tracking, which you are tracking, which the central banker is tracking, did not really probably create the case or a scenario for that stance to change. So I'd say that it is going to be an extended pause with a double A and a W, and I think that it is going to be incrementally data driven, not just from India, but more importantly, what the world's largest economy is going to do. So this time we saw a dissent in the US Fed decision. What is it going to be 60 days from now? I think that also will probably shape some of the thinking with our central banker, as is the case with the rest of the world. So I'd say a pause it is for now. And more importantly, if you see this Western Asia conflict receding, which is what the peace dove makers are trying to achieve, then this case just gets bolstered. And again, to repeat what I said earlier, demand side pushes or pressures is what warrants a rate hike typically, and that's not the indication we are getting right now.
Okay. So that's as far as the prospects of a rate hike and the prospects of inflation are concerned. I just want to talk about growth as well. Let's get the graphics back up on the screen. What was interesting is that while the RBI acknowledged all the challenges and all the uncertainty, largely coming from the global situation, El Nino also is global, and then of course there's trade, and then there is geopolitics. All of those are global factors. Despite that, the governor and the RBI has decided to boost its FY27 GDP outlook by 10 basis points. There you see, that's the tally, 6.7% for the full year. First quarter growth is proving to be more resilient. It's proving to be better than estimates at 7%. Bit of an increase for Q2. Q3, Q4, I think we are on status quo. So nothing has changed in those projections. Deopam, your read-through of this resilience, and actually it's taken a lot of people by surprise, even in the equity markets. When we talk about corporate earnings, for instance, most companies have weathered this better. But at a macro level, what do you think is responsible for this? And do you think growth can surprise, even more pleasantly on the upside, even above the current projection of 6.7%?
Sure. So this was the only hawkish statement, I think, which was there in the policy as far as the statement of the governor goes. Growth increasing unexpectedly can be considered something which can lead to a rate hike going forward, because that's just overheating of the economy. But saying that, since I represent a retail-focused NBFC, we have also seen, despite the situation which has been emanating from the West Asia conflict, consumer demand both some strong growth also across various pockets. And this is something which the governor also acknowledged in the form of discretionary spending. And I can vouch from the trends that we have been seeing in our industry. That's quite true as far as loan offtake, retail loan offtake is concerned. Also, although the global economy is slowing and there is so much of uncertainty, India's merchandise exports have been on a strong positive track. So that is also a very positive contributor to this upward forecast or upward revision in forecast by the governor. So given these facts which the governor mentioned, the strengths of the economy, which I also 100% concur to, I think 6.6, 6.7% is very achievable. However, anything beyond that at this point of time, I have my concerns that may not be possible.
Fair enough. Sandeep, that point on yields and the differential with the US, that's been a point of chatter, obviously, with the way the US yields have moved, right? Now, we don't know whether the Fed hikes or not. I mean, depends on whether we have a durable end to this war. As of today, they're talking about another peace deal. But how do you think RBI policy will evolve at a time where US yields have been surging, where the 30-year yield is at the highest level since the global financial crisis in the US?
Oh, you're absolutely right. I think it's been a long time. For a long time, Indian yields used to track US yields. Are they tracking the US yields right now? To be very honest, I don't think they've been tracking for some time, maybe 6 months, 1 year. But that doesn't mean that they'll stop tracking, especially if US yields hike up quite a lot. I think currently where we are, the levels that we are, Indian yields are quite less correlated to US yields. We are seeing US yields go up by, if I'm not mistaken, around 30 basis points, but our yields have really not been that much. We've been around 625, especially if you see before the Iran war, our 10-year yield was around 767. Today, sorry, 667. Today we are 677, just 10 basis points higher. But on the other side, if you see US yields have really spiked up since Iran war. So we haven't seen so much of correlation, but having said, if Fed does hike the rate, then most probably RBI will, if not sooner than later, go in tandem with Fed, and then you will see probably a little bit of correlation between Indian yields and US yields. But having said, so far, at least where we are right now, I don't expect too much of correlation. Maybe a couple of rate hikes from Fed, and we will start following what's happening.
Okay. Get your point. So just to go back on the whole flows picture and the external account and what's happening there, we didn't hear too much. I mean, I think the RBI also refrained from any assessment of the 40 billion that have flown in and what happens. There were some people who were thinking whether that window gets extended on the FCNRB deposits. Deopam, what is your read-through on the rupee? I was just saying this, just earlier on the show. The rupee today is pretty much exactly where it was on June, the day of the last policy. In your assessment, have we sort of passed that hurdle of that one-way slide? And would you expect any other measures in terms of on the external side?
I don't think any additional measures would be required to stop the steady decline or depreciation in the rupee that we had been seeing. A couple of reasons. One, the FCNRB reforms or the policy shift has led to significant, although there was a slow start, but over time the inflows have been quite handsome. If you compare this with the 2013 similar policy which was announced, the amount that we raised during the entire window, more than that has already been raised in the very first month this time onwards. So we can assume or we can expect further flows of another $40 to $50 billion at the least, which will make it a significantly large pool of dollars that would be stored within the countries and supporting the currency. And on top of that, a significant reason for the slowdown was the West Asian crisis. And if the base case scenario is to be believed, the next 1 quarter with November elections in the US coming closer, if the next 1 quarter is something when the West Asian crisis becomes a lot less intensive than what it is right now, then that will encourage a lot more FPIs to come back to the equity markets, although they are coming back to debt markets. The equity market inflows will also start to look very encouraging. So that should help the rupee to claw back some of the levels it had lost over the last 6 months. So I don't think any additional measures would be required for now.
Deopam, hearing you, I'm sounding very optimistic and very hopeful. Steady inflation, a rupee that has halted its one-way slide, a very, very, destabilizing move. growth that seems to be fairly resilient at 6.6, 6.7%. It's all sounding like a great package. So just give us your final economic wrap on where we stand today, and then I'll talk about what we need to do as investors in the market, equity, fixed income, etc. So I'm going to go back to the market guests here. But yeah, from an economic perspective, it's leaving me very hopeful today as we stand on the 5th of August.
I mean, you should be as optimistic as a